Every quarter, your investment company sends you a statement. Pages of numbers, charts, and financial jargon. Most people glance at the balance, maybe check if it went up or down, and then file it away. But here's the thing, you're not most people. You run departments, you manage complex projects, and you make high-stakes decisions. But when it comes to these statements, the financial industry has made them deliberately confusing. And today I'm here to give you a systematic framework to decode these statements in under 10 minutes. So you'll know exactly how your money is performing, what you're actually paying, and whether your investments are working as hard as you are. I've also created a free fee audit calculator that helps you plug in the numbers from your statement, and you'll see exactly what you're paying and what it's costing you over time. I'll remind you at the end. Let me show you a real statement of a VP of operations with about $750,000 invested. Instead of getting overwhelmed by these numbers, here are the 5 you need to find first. The first one you need to find is your total account value. That's what it's called, your current balance. But remember, this number alone tells you almost nothing. The second one you want to look for is year-to-date return, expressed as a percentage. That's how your investments performed this year. This is where the real story starts. The third number to look for is total fees paid. Look for things like advisory fees, fund expenses, or account service charges. Add them up. And by the way, if you're finding this helpful, I share strategies like this every single week. So if you haven't already, go ahead and subscribe so you don't miss the next one. And definitely share it with others. The fourth thing you'll want to do is a benchmark comparison. That's how did your return compare to a symbol index fund like the S&P 500. If you underperformed and paid higher fees, that's a problem. Number 5, you want to look for the net return after fees. That's your gross return minus your fees. This is what you actually kept. Let me show you what it looks like in practice. Take a look at these numbers. Total account value here is $752,000. The year-to-date return is 8.2%. Total fees paid, $11,280. That's 1.5% of her portfolio. The S&P benchmark is 10.1%, so her net return is 6.7%. So her investments returned 8.2%, but after fees, she only kept 6.7%. And the S&P 500, which she could access for 0.3% in fees, returned 10.1%. That's a 3.4% gap. On $750,000, that's $25,500 she left on the table this year alone. The fee audit calculator does this math automatically. Just download that and plug in your numbers from your statement. Now let's go deeper here. Here's how to read each section of your statement systematically. The first one you want to look at is holdings, your investment inventory. This lists every investment you own, your stocks, your bonds, your mutual funds, and even ETFs or exchange-traded funds. What to look for here is the expense ratio column. This is the annual fee for each fund. Under 0.5% is reasonable. Under 0.1% is excellent. The next thing to look for is concentration. Is more than 20% of your portfolio in a single stock? That's a risk flag. The next one you want to look for is any overlap. Do you own 5 different large cap growth funds? You're likely paying multiple fees for the same exposure. The next part is to do a transaction history. Take a look there and what actually changed. This shows every buy, sell, dividend, and fee charged during the period. What I want you to look for here is trading frequency. More than 10 to 15 trades per quarter is too much. I want you to ask why. Because frequent trading increases costs and often signals churning. Dividend reinvestment. Are your dividends being reinvested automatically or sitting in cash? Are there fee deductions? These are sometimes buried here instead of the fee section. The next one I want you to look for is performance summary. That's your report card. This compares your portfolio's return to market benchmarks. Here's what to look for with a benchmark comparison here. If your portfolio is consistently underperforming a simple index fund while charging higher fees, that's a systematic problem. Take a look at time-weighted versus money-weighted returns. Time-weighted shows pure investment performance. Money-weighted returns factors in when you added or withdrew money. If you see multiple time periods, look at 1-year, 3-year, or 5-year returns. One bad quarter doesn't matter. Consistent underperformance does. Okay, the next part we're going to look at is fees and charges. This is your hidden cost center. This is a section where almost everyone ignores, and it's often the most important. Here's what to look for here. Look for advisory fees, what you pay your advisor. Usually you'll see 0.5% to 1.5% of assets. The other thing is fund expenses, what each fund charges internally. This is on top of the advisor fees, account service charges, platform fees, custodian fees, and account maintenance. Then you want to look at transaction costs. Those are trading commissions, which should be 0 or near 0 in 2025. Add all of these up, If your total all-in cost is above 1.5%, you're likely overpaying. If it's above 2%, you're definitely overpaying. The free fee audit calculator does all this math for you. It adds up your fees and shows you the true cost over time. So now that you know what to look for, here are the red flags that should trigger immediate action. If expense ratios are over 1%, you can get excellent index funds for 0.3% up to 0.2%. Anything above 1% needs justification. Another red flag is excessive trading activity. More than 20 trades per quarter without a clear reason often indicates churning. That's trading to generate commissions rather than returns. Another red flag to look out for is complex fund names you can't explain. For example, Structured Alpha Tactical Rotation Fund. That sounds impressive, but often means high fees and poor transparency. If you can't explain what a fund does in one sentence, reconsider owning it. Another red flag is missing or hidden fee disclosure. If you can't find what you're paying after reading your statement twice, that's a deliberate design choice and not in your favor. Another red flag to look out for is consistent underperformance versus the benchmarks that we talked about. One bad year happens, of course, but 3 bad years while paying premium fees, that's a pattern. These statements should give you clarity, not confusion. If reading yours makes you feel more lost, that's information too. By the time you finish reading your statement, you should be able to answer 3 questions. Question 1, what did I earn? Not just the dollar amount, but the percentage of return. For example, my portfolio had a rate of return of 8.2% this year. The second question I want you to be able to answer is, what did I pay? All fees combined. Advisory fees plus fund expenses plus any service charges. And I want you to be able to say, my total cost was 1.5% or $11,280, for example. The third question I want you to answer is, what did I keep? Your net return after fees. So I want you to be able to say, after fees, I kept 6.7% of my gains. So here's a quick calculation framework. I call it the net return formula. Your gross return, say 8.2%, minus your total fees, 1.5%, equals a net return of 6.7%. Once you can answer these 3 questions, you'll never feel intimidated by your statements again. You'll have the clarity to make informed decisions about your investments. So if you want to make this process even simpler, get my free fee audit calculator. It helps you plug in the numbers from your statement. It calculates your total fees automatically, and you see what those fees are costing you over time. You can also compare your performance to benchmarks and answer the 3 key questions we just covered. So go to jillcollins.com/fee audit and download it for free. It's the same calculator I use with my private clients to transform confusing 20-page statements into clear, actionable insights in just under 10 minutes. If you found this valuable, hit subscribe. I release new financial clarity videos every Sunday. And check out the other ones I've done too. They're really helpful as well. Next week, we're going to be covering the 5 signs that might be time to fire your financial advisor. And if you're ready for personalized help, getting clarity on your complete financial picture, there's a link in the description to book a discovery call with me. Thanks for watching. I'll see you next week.